Now, we have polling. It indicates the average American investor does not want ESG. It's a progressive leftist attempt to usher in their version of socialism. The E is supposed to stand for environment, but it's really eliminate fossil fuels. S stands for social, but translates into social justice / critical race theory. And the G stands for governance, but really it's a gender race quota requiring minorities and LGBTQ be included on every board of a listed public company. And all this is made possible in part by the power given to the big three index fund providers, especially BlackRock. We've covered ESG and BlackRock before on this program. We've also covered the hypocrisy of their position, promoting ESG while investing heavily in China. Think about China. Are they good for the environment? No, China is the worst polluter on the planet. Is China good for social? No, they control the population and even allow forced organ harvesting, social credit scores, and forced abortions. Is China good for governance? Absolutely not, as their companies often violate all traditional global standards on governance. They're not even good for diversity, and as ESG requires, they're cracking down on effeminate men. Even George Soros has called Larry Fink and BlackRock as a threat based on their pro-China stance. This September, Soros wrote the following for the Wall Street Journal. He said, "The BlackRock initiative imperils the national security interests of the U.S. and other democracies because the money invested in China will help prop up President Xi's regime, which is repressive at home and aggressive abroad." Wow! When George Soros can call you out, you must be really bad. So what do we do about this? At the national level, we can follow the prescription laid out by Jack Bogle. I can't go into his entire list of proposals, but we'll put them in the economic battle plan for this episode. One example Bogle says we should consider is enact federal legislation making it clear that directors of index funds and other large money managers have a fiduciary duty to vote solely in the interest of the fund's shareholders. That's shareholder capitalism. Not socialism, not stakeholder capitalism. Now, no one is suggesting we ban index funds, but we clearly must take some dramatic steps to address the existential threats they're creating. In terms of the bubble risk, the answer is to educate market investors to avoid bubbles. Unfortunately, it's hard to know if a bubble really does exist, and even if it does, when it might burst. So I would suggest everyone should have a professional advisor who is aware and watching out for these risks. And you are going to need a financial advisor for what's coming. It's getting complex, it's getting challenging, and a good financial advisor can help you weaponize your money before it's weaponized against you. If you don't act with an advisor and just on your own, it may be too tough. So for the ESG threat to your values and America's future, we started the NSIC Institute. We trained 10,000 advisors, $1 trillion in capital. That means millions of investors who vote, and they invest in ways that defend rather than destroy liberty. We're launching the Economic War Room training at Liberty University. Now, not all advisors agree, but don't you want an advisor who does agree with you? They'll be able to band together at the NSIC Institute, National Security Investment Consultant. If your advisor is not willing to support you in this, find a new advisor. I promise, there are lots of advisors who are looking for new clients like you. And if you're an advisor, this may be your niche. Lots of clients are looking for a like-minded advisor.